Good morning. It's Monday, September 30th, 2024. I'm Jared Hall with Harvest Investment Strategies. Welcome to the week ahead. Recapping last week, the S&P 500 rose 0.6%, marking its third consecutive weekly gain. The index is now up 1.6% for September, putting it on track to close out the month in positive territory. If this holds, it would mark the S&P's fifth straight monthly gain. Last week's key economic data included the second revision of second quarter GDP, which held steady at 3% annualized growth rate, surpassing expectations of a slight downward revision. Additionally, the Fed's preferred inflation measure, the August PCE price index, showed inflation continuing to cool, with prices rising just 10 basis points month over month and the year-over-year rate falling to 2.2%. Looking at last week's market sectors, materials led the gainers, up 3.4%, followed by consumer discretionary up 1.8%. Materials received a big boost after China announced a wave of economic stimulus. It is believed that this stimulus will create demand for raw materials, boosting this sector across the globe. Looking ahead to this week, today marks the final trading day of the third quarter, and the S&P 500 is poised for a winning quarter with a 5.1% gain so far. However, futures edged lower this morning as investors weigh solid gains in China against concerns over Hurricane Helen and a potential worker strike along key U.S. ports. A critical data point to watch this week will also be the September employment report, which could influence market sentiment as we enter the fourth quarter. Investors are also keeping an eye out on business activity from Chicago, with the PMI report expected later today. Despite the Fed's recent rate cut, Treasury yields have been climbing. The 10-year yield rose 3.5 basis points to 3.78%, while the 2-year yield jumped over 6 basis points to 3.625. While the 2s and 10s are not inverted, the 3-month T-bill is still inverted against the 10-year. It will be interesting to see when the Fed's rate cuts help shape the full yield curve back to normal. That's all for this week. Thanks for watching, and be sure to follow along with us for more content like this.